client last week messaged me that the mortgage calculator he was using said he could afford the house, but as he started looking at his numbers, it felt a lot tighter than he expected. That question, more than almost any other, is why I'm making this video today. The sticker price of a home in the East Bay is not the actual cost of living here. There are line items showing up on people's budgets that nobody warned them about. And today I'm walking through every single one of them, so you're not the person getting surprised. This is not meant to be a video to talk you out of moving here. It is meant to make sure that the version of you standing in your new house 6 months from now feels prepared instead of blindsided. There's a real difference between those two experiences, and it almost always comes down to whether someone gave you the full picture before you signed anything. If we haven't met yet, I'm Jen Collins, and I help people buy and sell homes and figure out where exactly they want to live here in the Tri-Valley and throughout the East Bay. A lot of the people that I work with are relocating from somewhere completely different, another state, another part of California entirely, and this channel exists to give you the real picture of the East Bay before you commit. So let's talk about what it actually costs to buy and live in the East Bay in 2026, beyond just the number on the listing. The story you hear online is usually just the median home price, and that number alone tells you almost nothing useful. Just imagine two people, both buying a $1.5 million home here in the East Bay. One of them budgets only for the mortgage payment. The other budgets for the mortgage, the property tax reality, the insurance reality, and the utilities reality. 6 months in, that first person feels stretched thin and really confused. The second person feels exactly the way they expected to feel. Same house, same price, completely different experience, because one of them actually understood the full cost. Let's start with the obvious piece, but I want to give you the real numbers. Mortgage rates right now are just under 7%. Most homes across the East Bay run above the conforming loan limit, which for Alameda and Contra Costa counties in 2026 is approximately $1.25 million. Once you're borrowing above that number, you're typically in jumbo loan territory. And jumbo lenders often want somewhere between 10 and 20% down, sometimes even more, depending on your loan size and financial profile. That's a very different number than the 3 to 5% down payment some people picture when they think of buying a house. Just imagine you're relocating from a state where the median home price is $400,000, and you've been running your numbers off of that mental math. Here, that same monthly budget might only qualify you for a starter condo instead of the single family home you've been picturing. That is not me trying to scare you off. It is me trying to make sure that the first conversation you have is with a lender, and that happens before you fall in love with a listing, not after. Another piece that surprises a lot of relocating buyers is that a lot of East Bay homes, especially in newer communities and anything with shared amenities, comes with a homeowners association and a monthly HOA due. That fee can range from modest to genuinely significant, depending on what it covers. Landscaping, gates, a clubhouse, sometimes even a golf course in communities like Blackhawk. This is not a reason to avoid an HOA neighborhood. Plenty of buyers love the low maintenance lifestyle that some HOAs provide. It's just one more number that needs to be included in your monthly budget next to your mortgage payment, not to get discovered after you move in. Another surprise in California real estate is often related to property taxes. Here's where it gets real. Your base property tax rate in California under Prop 13 is 1% of your purchase price. But once you add in local voter-approved bonds and assessments, most East Bay homeowners land somewhere closer to 1.1 to 1.25% every single year for as long as you own the home. Then there's the bill that catches a lot of people off guard. A few months after you close, sometimes as long as 6 months later even, you'll get what's called a supplemental property tax bill. It's a one-time bill covering the gap between the seller's old and sometimes much lower assessed value and your new purchase price for the remainder of that tax year. It is not paid through your mortgage escrow, and it shows up separately, and it can sometimes be in the thousands of dollars. Better to budget for it before you close, not after. And if you're looking at newer construction, especially in places like San Ramon's Doherty Valley and throughout East Dublin's newer developments, be sure to ask directly about the Mello-Roos taxes. These are special tax districts that fund infrastructure in newer neighborhoods, and they get added right on top of your regular tax bill. In some of those newer pockets, more than one of these districts can actually stack on top of the same property. But here's the silver lining buried in all of this. Once your base tax rate is locked in at your purchase price, it's capped from rising more than 2% a year for as long as you own the home, no matter what happens to the home values around you. That's actually one of the more homeowner-friendly features of California's system, once you're past the surprise of that first year. The rules are just genuinely unusual compared to most of the rest of the country, so budgeting for that first year correctly is really important. This next part genuinely shocks a lot of people moving here from outside California. Electricity here, through PG&E or Pacific Gas and Electric, runs close to double the national average per kilowatt hour. You heard that right. So depending on where you're moving from, you may want to take your utility bill, double it, and then add that to your budget. It's a big enough difference that it's worth factoring into your budget the same way you would factor in your mortgage payment. Rates have actually been trending down just a tiny bit recently after many years of increases, which is genuinely good news. But even with that tiny relief, you should still plan for a noticeably higher power bill here than wherever you're actually moving from. If you're taking notes right now, great, keep going, because insurance is next, and it might be the biggest surprise on this whole list. Be sure to scan our QR code here for our complete buyer guide, and if you're ready to get started, call or text me at the number in the description for your complimentary consultation. Homeowners insurance has gotten genuinely complicated in parts of the East Bay, especially anywhere near the hills. Private insurers have been pulling back from high wildfire risk areas, which pushes more homeowners into California's FAIR Plan, the state's insurer of last resort. In the highest risk zip codes statewide, close to 4 in 10 homes are now covered through the California FAIR Plan. And in the most extreme risk zones, premiums can run anywhere from $5,000 to over $25,000 a year. If you are looking at a home in the hillside neighborhoods, be sure to get a real insurance quote before you remove your contingencies, not just a guess. Let's take a quick pause here. If you're relocating to the East Bay from anywhere, another state or another part of California, our team specializes in walking relocating buyers through exactly this kind of budgeting with a complimentary no-pressure consultation. And if you're headed somewhere outside of our direct service area, we have an expert vetted referral network of agents that we trust completely, people that we would send our own family to, and we'd love to connect you with them. All right, let's get back to it. Beyond the big line items, day-to-day life here does run at a premium compared to a lot of the rest of the country. Gas, groceries, and general services all tend to be above the national average, which is true across most of California, not just the East Bay specifically. It's not usually the number that breaks someone's budget on its own, but it's worth padding your monthly estimate a little rather than assuming it will match what you're paying somewhere else. This week I was talking with a financial planner friend of mine who has clients moving from LA, and even they were surprised by the cost of living in the Bay Area, beyond just housing prices. There is a lifestyle upside worth talking about here too, though, so it doesn't feel like all bad news. A lot of what you're paying for shows up in things that are genuinely hard to put a price tag on. We have some of the strongest public schools in the state. There's easy access to wine country, the Sierras, and Lake Tahoe. And the Pacific Coast are all within just a couple of hours. Plus, there's a job market anchored by major employers right here in the Tri-Valley, instead of taking a long commute into the city. Plus, we have things like clean streets and safety in many parts of the Bay Area that consistently drive buyer demand. The premium is real, and so is what you're getting for it. So here's how to actually use all of this. If you're relocating from out of state, do not build your budget just off of the mortgage calculator. Add in realistic property tax rates, a placeholder for that supplemental tax bill, and a real insurance quote before you fall in love with a specific house. If you're looking at anything near the hills, be sure to get your insurance quote early in the process, not after you've already waived all of your contingencies. This simple step alone has saved more than one of my clients from a big budget disaster after closing. If you're considering newer construction, especially in San Ramon or Dublin, be sure to ask about Mello-Roos before you compare it dollar to dollar against an older home in Danville or Alamo. And if the home you love has an HOA, get the current monthly dues and the HOA's financial statement before you write an offer, not after. If all of this feels like a lot to track by yourself, that's exactly what I'm here for. Call or text me at the number in the description and I'll walk you through all of this. As a reminder, I am a real estate agent, not a financial advisor. The numbers I talk about in today's video reflect current market and utility data as of when we film this, and individual costs will vary by property and utility provider. Always confirm exact numbers with your lender, your insurance agent, and the county assessor before you make a final decision. So to summarize all of this, the mortgage payment is only one piece of what it actually costs to own a home in the East Bay. Property taxes run higher than the base rate of the 1% once you add in local assessments. The supplemental tax bill is real, it is not optional, and it can be expensive. Mello-Roos and HOA dues matter on newer construction and shared amenity communities. And insurance, especially near the hills, deserves a real quote before you commit to the home. If this video gave you a clearer picture, and I hope it did, hit the like button, subscribe to our community, and turn on notifications so you don't miss the next one. And if you know someone planning a move to the East Bay, send this to them before they start shopping. I'm Jen with the Jen Collins Group, and we help people make smart, confident moves here in the East Bay, whether that's next month or a year from now. Of course, if you're planning to buy or sell your home in the East Bay, I would love to guide you through the process. Call or text me at the number below to schedule a complimentary, no-obligation strategy session. Thanks so much for watching, and I'll see you in the next video.